Financial Matters. Today we're talking to Coleman about his financial situation. Good morning, Coleman.
Morning.
How are you?
Doing very well. How are you?
Good, fantastic. What can we help you with today?
Well, I have a bunch of questions about finance.
Okay.
Where to start?
Tell me about your situation, tell me about where you are in your life, and tell me what's going on.
Sure. So I'm 30 years old. Moved to Denver a few years ago. Spent the last 4 years in New York working at Goldman Sachs. So a little bit of finance knowledge, but not as much about financial planning. So I'm hoping to get your opinion on a few things there. But yeah, I have a house here in Denver. And recently engaged. So
Congratulations. How did you meet her?
I was driving down the road and wasn't paying as much attention as I probably should have been, and had a bit of a fender bender. And this woman comes out and she is pissed off at me because she was late to work, and it was a whole ordeal. And you know, she looked very beautiful. I couldn't help it. And my dad always told me, you know, get a woman that looks beautiful when she's mad at you. It's the key to life. So, yeah, I ended up exchanging numbers for insurance information and called her a few times. She finally calls me back, and one thing leads to another, and we've been dating for 4 years now. So.
Congratulations, and you're planning a wedding?
Yes, we are.
Okay.
It is a lot of work.
Okay.
And an expensive ordeal. So.
It is. Weddings, think about a wedding and the cost of a wedding. It's thinking about working for 3 years to pay for a wedding.
I know. I'd love to have a small wedding, but it's an open conversation with her right now.
Okay.
On our guest list,
Okay.
and you know, could be 75,000, could be 30,000. Who knows?
Okay. Let's talk about what's going on financially. Your financial picture, real estate, investments. Let's kind of go through that.
Yeah. So I bought a house just west of Denver. It's probably worth before COVID. So I locked in a lower interest rate, about 2.75%.
Nice.
It's obviously appreciated a lot in value, as most of the real estate market has, and I'm probably sitting at about $200,000 in equity. So it is a little bit smaller, and the fiance has been, you know, trying to get me to upgrade to something a little bit larger to potentially start a family.
Okay, so are you thinking about selling the current home?
I thought about doing, there's a few different options. I have thought about selling it, using some of that equity to pay for the wedding and put a down payment on a house, or I thought about doing a HELOC and you know, using those funds to pay for the down payment and keeping the house, something along those lines.
Okay.
What do you think?
Let me ask you a question. In your home, tell me about your home. Is it fully built out from the basement all the way up? Ranch? What is it?
Yeah, so it's a 3-bedroom, 2-bath, but it has a separate unit in the basement, which
Nice.
is with its own entrance. So right now I rent that out to a buddy for about $750 a month. Not a lot, but I have been thinking about the idea of a Airbnb or a VRBO. It has all the components I need for that. I just haven't gone around to doing it.
Okay, well that would be interesting, because if you know, rents today, a studio is going for $2,000 a month. So 1 bedroom, is it a 1 bedroom downstairs?
Yeah.
So you're talking about easily $2,000 a month. Your mortgage is at $275 currently?
That's correct.
And what is your payment?
About $1,800 a month.
$1,800. So if you rented the downstairs for $2,000, you'd be making $200, plus your cost of money is nothing.
Yeah.
Or you sell it all, take $200,000, you got the exclusion, it's a primary residence, you probably did some upgrades, so you don't have any capital gains, but buying a more expensive home, $750 million, what are you thinking?
Yeah, probably about that.
Okay, so now you're tacking on a mortgage. Today a mortgage is 7.3, so you're going from 275 to 7.3.
And what's that a month? That's gotta be
Substantial.
$4,000 or $5,000 a month.
Yeah, double your payment. Now you're working to pay off your loan, because the wife wants a bigger house, and interest rates are on the upswing. Plus you have equity that's growing. Is the wife willing to wait maybe several years, get that cash flow, get you guys in a good situation? Maybe, what does she do for a living?
She's a teacher.
So it doesn't make a lot of money, unfortunately. You're the breadwinner.
Yeah.
So maybe talk her into not upgrading right now, living upstairs, tell your buddy thanks, but need to do a real VRBO or Airbnb it.
Yeah.
Short term is always a good way to go because the incremental rent on short term is much better than long term.
Okay.
Something to think about today, especially you're going to be living close, but even if you weren't, with internet locks and cleaning companies working remote, I personally have several rental properties all over the country, and it's really easy. It's clicking a button on.
It's been a good return.
It's been, my cap rate's 35%.
Okay, that's pretty good.
You're not going to get that in the market every year. In fact, very few years. So okay, let's talk about. So she wants to put a lot of money into the wedding. How do you talk a woman out of not putting a lot of money into a wedding? How do you do that?
It's a question as old as time, you know?
Madonna mia.
Yeah.
I don't know. Maybe give her a really, really nice vacation to the Greek Isles. A honeymoon to the Greek Isles.
Yeah, make up for it.
Or a $75,000 wedding. Let's talk about your financial investments. What's going on with your financial investments?
Most of my money was in a 401k at Goldman. I'm
Okay.
now at Robinhood, and I haven't rolled that over yet. And I actually don't understand the process for that.
Okay.
I have, 80 grand sitting in a 401k right now.
Okay, let's talk about that. Why would you keep money in a 401k or why would you not? Okay, the bottom line is when you leave a firm, they no longer match. Okay, and with a 401k, unfortunately, 401k is very restrictive. They're going to pick choices within the plan that you can invest in. You can roll that to a rollover IRA at no cost, no charge, and you could self-direct it. That means you have the plethora of the investments at any custodial, whether it's Robinhood or whether it's Schwab, or whether it's E-Trade, and you have the complete smorgasbord. And there's some really great ETFs that have come out that can really give you, reduce your risk, but give you market returns. One of the things that I like, one of the things we do at our firm is index treasury notes.
Okay, what's that?
Well, that's a way to take the interest from a treasury, leverage it with a market instrument so I can get market returns and really have no downside risk. It's really a great tool. We haven't seen this opportunity in 20 plus years because interest rates haven't been this high in 20 plus years. So that's something you can look at, give you the growth and the safety, but definitely roll over that 401k. No reason to keep it in. The only reason why people would keep money in the 401k is if they get a new job, what they will do is they'll roll that 401k from the old company to the new company. You can do that if it's not corrupted. In other words, if you keep it as a 401k, you can roll it to another 401k. If you roll it to an IRA rollover, then you cannot roll it back into a 401k.
Okay.
But here's my argument on that. My argument on that is any 401k is not as good as a self-directed retirement plan because you have thousands of choices where in 401k you're limited to their basket.
I think I had 20 options at Goldman.
Yes,
Yeah. Okay.
So you're currently working at Robinhood.
Mm-hmm.
Now, do you have stock options?
Yeah, it's a huge proponent of my compensation.
Okay, so that's the reason you left is they use stock options.
Yeah.
And it's a growing firm.
Absolutely.
So they give you stock every 6 months, every 12 months?
Stock options every quarter.
Every quarter, that's fantastic.
Yeah.
Now, do you have to hold that for a period of time?
Yeah, there's a 1 year holding period.
There's a 1 year holding period. And how long have you been with Robinhood?
2.5 years.
2.5 years. So that's accumulating.
Absolutely.
And you've seen some volatility in Robinhood.
There has been substantial over the past 2 years.
Okay, substantial over the last 2 years. So a couple things you can do when you buy stock options. What you can do is, especially as you become a very large concentrated position, which you have now in Robinhood stock, you can actually do a couple things. You can use derivative strategies. You can do put spread collars. You can do a zero cost collar. What that does is it locks in the price.
Okay.
Zero cost collar is almost very common in the commodities industry to defray or to reduce the volatility of, let's say, an oil company producing oil. You could buy puts and sell calls to pay for puts, and therefore you're not going to see Robinhood stock. If you get Robinhood at 60 and it goes down to 10, you don't want to sell it at 10 and diversify it. If the position gets to a point where after the 1 year holding period, you definitely do want to diversify that. You don't want all your eggs in one basket, even though it's a great company. But you should look into a derivative strategy when you buy the stock options, then it becomes a married position. Okay? If you do it after the fact, you're going to cause a taxable event, and therefore that's a big problem, especially a lot of clients might have Amazon stock and they're sitting on $1 million capital gain. They come to me and say, Dom, can I hedge my gains, especially this year? I said, well, the problem is if I buy a protected put on that Amazon position, it's going to cause a taxable event. And you're going to still own the stock, but you're going to have to pay the tax on the gain. But if you do it at the time you buy it, it becomes a married position. And therefore you don't have that consequence. So that's something you could think about as going forward. You can use some type of derivative strategies, and that's something that we're very familiar with here at our firm. We can help you with that as your next opportunity comes due, as your next bonus comes due. So yes, I would roll out to Robinhood, or we can help you with some of the investment strategies that you have at Goldman. So definitely do a rollover on that, and then definitely look at the stock option plan as a way to hedge off that volatility. A lot of people get stock options and the stock falls out off the cliff. They're worth millions, and then now they're worth hundreds of thousands of dollars because those stock options got crushed. So there are ways with exchange traded derivatives to protect that position and not cause a tax consequence. You can also look at a strategy called cross asset hedging. A good example is my client that owns Amazon. When he came to me and he asked me about Amazon, I said, well, what we could do is we could do an option strategy not on Amazon, but on XLK. XLK is the consumer staples and highly correlated with Amazon. So as those two assets move together, because I'm hedging a different asset with Amazon, I'm not causing a tax-related event. It's a different asset. The IRS does not see that as substantial the same. And therefore, if you see a drop in Amazon, I'm hedged off because I have hedges on that cross asset that's highly correlated, and that's XLK. Does that make sense?
So when Amazon drops, XLK consistently drops as well.
Well, it's 99% correlated. Anytime you cross asset hedge, you always have a little bit of what we call tracking error, but Amazon is a big part of the consumer staples, this sector spider, if you would. And so I feel very comfortable that you're going to see, yes, if you get a 10% or 20% drop in Amazon, you're going to see a very similar drop in the sector spider XLK. So, and this is a way you can hedge and not cause a tax event, and you could hold those values, whether it's now talking about Robinhood. So if you have Robinhood and you feel the stock has run a bit in this last run we've had, and you want to sort of hold that value, we can do a couple of different things. I teach my students, my interns, strategies like stock protection or stock enhancement, where we can actually protect that position. We can buy a put and sell a put further out of the money. It holds the position on that, but we're willing to buy the stock lower if it drops back down, which you would be doing anyway when you do a stock option plan. So there's some really cool things we can do about hedging and managing that risk. Does that make sense?
Yes, it does.
Okay. And I think I have some videos on that, and definitely you can watch those.
Yeah.
So I'm excited for you. You're in love.
Yeah. A lot of big changes coming.
A lot of big changes coming. So in conclusion, I would say I would try to talk your wife into a smaller wedding, bigger honeymoon. Number one. Number two, I would not buy a new home. You're going from 275 to 7.3.
Yeah.
Tell me about, you were talking about a HELOC.
Yeah.
Talk to me about that. You're going to take a HELOC. Why?
So I thought
To pay the
about
wedding.
paying the wedding, putting a down payment on the new home, taking the cash directly out, and then using that on the wedding, that equity.
Okay, a couple of things about the HELOC, or the home equity, or the home equity line of credit. Since the Trump 2017 tax cuts, we can no longer write off loans on our home. We could prior. It has to be substantially used for home improvement.
Okay.
So if you were going to fix up your home, yes, it's tax deductible.
A wedding's not home improvement? I can't do that?
A wedding is not even, it's not improvement anyway. I didn't say that. No. Weddings are, institutions are a beautiful thing. I'm just not ready for an institution. So I would say this. I would say home equity, line of credit. You have credit card debt?
12,000 probably.
And what's the interest rate on that?
A lot.
A lot.
Much more than my mortgage.
Okay, now where it makes sense is you take a home equity line, which is going to be lower than your credit card, more than your current mortgage. Use that to pay down
Credit card debt?
the credit card debt, because
Okay.
you're paying 30%. Maybe
Yeah, probably.
your line of credit might be 6.5. So that makes sense. Plus, what you could do is then you could pay down that home equity line of credit. There's no prepayment on that. It's like a credit card. It's like a door. I know actually people use a home equity line of credit like a credit card. They put their paycheck into the home equity line.
Okay.
It drops it down. It reduces their payment. They spend from their line and they let their line breathe, and they're able to by dumping their paycheck into the line. What it does is it gives them a situation where they can reduce the payment. It's a lot cheaper than a credit card, and
A lot lower interest.
a lot lower interest. So that's something you might want to take a look at.
Yeah,
But
I have the home equity. It's definitely a good option for me, it sounds like.
the line of credit, as opposed to the home equity, the home equity it's not a two-way door. It's just sort of a second mortgage.
Okay.
It's a fixed interest rate, and what happens is, in that case, you're going to pay a payment. If you pay it down, you can't take it back out.
Okay.
So I kind of like the line idea a little
Yeah.
bit better than home equity. Those are the nuances, but they both are not going to give you a tax deduction unless you use it substantially to buy or for home improvement of your home. And it doesn't sound like you're doing that.
No.
So the big thing is, see if you can talk your wife out of the wedding, get married at the county clerk, and take her on a 6-month vacation. So, any other questions?
That's all I got.
Hopefully it was helpful.
It was, thank you. Really
Okay.
appreciate the time.
Well, thanks. It was very nice meeting you, and I wish you the very best. Well, that's the another show of Financial Matters, and stay tuned for our next show and the next situation. Thank you.